This is Michael Talis with the Talis team. 2024 was quite a year. Inflation, rising interest rates, elections, egg prices, and constant talk about an upcoming recession. Despite all these uncertainties, the Bay Area home prices were still growing and the housing market remained very competitive. After 2 years of declining market activity in 2022 and 2023, the inventory, the number of homes available for sale, started to increase. 21,343 homes were listed for sale in 2024, a 19% increase year over year. This increase was not enough, however, to satisfy the demand, as the number of available homes remained significantly below pre-COVID levels when 25,000 to 27,000 homes were listed annually. Sellers' market continued, driven by constant shortage of inventory and strong buyer demand. The median time on the market was only 10 days, meaning that half of the homes that came to the market were sold in 10 days or less. Most desirable properties were sold with multiple offers after the first weekend of open houses, further confirming how difficult it is to buy a home here in the Bay Area, how strong the seller's market is, and how desperate buyers become in this competitive environment. Inventory remained around a month and a half for most of the year. Median home sale price in Santa Clara and San Mateo counties was driven up to $1,615,000 in 2024, a 7.7% increase compared to the previous year. Elevated interest rates and growing home prices put a dent into the affordability of housing and kept some of the potential buyers off the market. Mortgage interest rates, jumping above 7% at times, were too much for some and forced them to delay their moving plans. At the same time, higher interest rate levels discouraged many potential sellers from putting their homes on the market. Homeowners who are currently paying 3, 4, or even 5% interest rates on their mortgages were kept in place by the rates they are paying. If they would sell, they would need a new place to live in. They would join the ranks of homebuyers. The idea of trading their 3% mortgage for a 7% one kept most of the owners in their homes, even when they needed to upgrade, move closer to their new office location, or downsize. What should we watch for this year? Let's review 5 major factors impacting the Bay Area housing market in 2025. First of all, continuing low housing inventory. A balanced housing market typically has 5 to 6 months of supply. Most markets today average around half of that amount, and in the Bay Area, it is even lower. According to Freddie Mac, we still have a shortage of around 3.7 million homes nationwide to satisfy the existing demand. And while in the markets outside of the Bay Area new construction can provide some relief, here in Santa Clara and San Mateo counties, most usable land is already built up. Additional housing will be coming in the form of higher density condominium or townhome communities and will continue to lag behind the demand for the foreseeable future. Number 2. Elevated mortgage rates. In early 2022, mortgage rates hit historic lows of around 3%. As inflation surged and the Feds hiked interest rates to tame it, mortgage rates more than doubled and currently hover close to 7%. Most economists agree that in 2025 mortgage rates will remain above the levels we experienced in the prior 2 decades. Due to high volatility, it is hard to predict which direction the rates will move. Current consensus is that the rates should stabilize between 6.5% and 6% by the end of the year. Third, rate lock effect. Since the majority of homeowners are locked into their mortgage rates below 5%, and sometimes even below 3%, they are reluctant to give up their low mortgage rates and have little incentive to list their homes for sale. They will still be living in a home that is too small for their needs or endure a long commute instead of moving and exchanging their low interest rate mortgage for the current one. We don't expect any relief in terms of the inventory until the rates drop below 5%. Keep in mind that most of the Bay Area sales are coming from the resale market. Inventory will remain a significant problem way past 2025. Number 4. High home prices. Although home buying demand has been suppressed recently by high mortgage rates, Bay Area home prices continue to grow and grow at a faster pace than average for the country. While home prices grew by 2.5% nationally, according to Zillow, here in Santa Clara and San Mateo counties, price growth was close to 8% year over year. With the limited opportunities to increase the housing stock, we expect prices to continue growing, presenting additional challenges, especially to the first-time home buyers. And finally, number 5, unpredictable inflation. Inflation means an increase in the cost of basic goods and services, reducing purchasing power and suppressing buyers' confidence. It also impacts mortgage rates. When inflation is high, lenders typically raise interest rates on consumer loans to ensure profitability. Overall, we expect the housing market to remain challenging for the buyers. The inventory should increase slightly in 2025, inching closer to the levels we experienced prior to COVID. After 2 years of record low numbers of sales, pent-up demand will force more buyers and sellers to enter the market regardless of the higher interest rates. Times of 3% mortgages are gone, and interest rates are expected to stabilize between 6% and 6.5%, restoring some of the consumer confidence. Keep in mind that according to Freddie Mac's weekly mortgage rate survey, all-time average interest rate is 7.7%, with the max peaking at above 18.6% back in 1981. Consumers are getting used to this new level of interest rates, and it will become less of a barrier to market entry. Home prices will continue to grow, but at a slower pace than last year. Nationwide, the prices are expected to appreciate by around 3%, and here in the Bay Area, we expect 4 to 6% home value growth. This is Michael Talis with the Talis team. If you are thinking about buying or selling a home within a year, or even 2, let's get together on the phone or on Zoom to review what you need to do to enter the market and to complete a successful purchase or sale. My contact information is in the description of this video. Keep in mind that I'm available in the evenings and on weekends at the times when you are off work. I am looking forward to connecting with you. Till next time.